You've been told that saving money in the bank is the safest way to secure your financial future. But what if we told you that's not entirely true? Indeed, banks have long been considered the go-to haven for our hard-earned cash. They're seen as stable, reliable, and safe. The vision of a bank vault, heavy and impenetrable, is etched into our collective consciousness. You give them your money, and in return you get peace of mind. It's a straightforward transaction, but is it really the best one? This perception of security is largely due to the fact that banks are regulated by governments and often offer insurance on deposits. It's comforting to know that even if the bank goes under, your money is protected. However, what if we told you that this sense of security might be an illusion? What if we told you that there are alternatives that could offer you more than just a safe place to store your money? Now, we're not saying that banks are inherently bad. They offer essential services like loans, credit cards, and of course savings accounts. But when it comes to growing your wealth, they might not be the best choice. The interest rates offered by banks are often meager, especially compared to potential profits from other investment avenues. Moreover, banks are businesses at the end of the day, and they have to make a profit. So, are banks really the best place to keep your money? We invite you to challenge the conventional wisdom, to question the status quo, and to explore the potential of other more profitable alternatives. Buckle up, because we're about to take a deep dive into the world of finance and how you can make it work for you. Ever heard of the term inflation? It's a little beast that gobbles up the value of your money over time. Inflation, in the simplest terms, is the rate at which the cost of goods and services rises over time. It's like a stealthy, quiet thief, sneaking into your bank account and gently pulling the value out of every pound, dollar, or euro you have tucked away. And here's the kicker. It happens even when you're sleeping. Let's paint a picture. Imagine you've worked hard and managed to save £1,000. You've done the responsible thing and deposited it in a bank. Fast forward a year and you'd expect that money to have at least maintained its value, right? Wrong. Inflation has been at work, and the cost of goods and services has risen. That £1,000 can't buy as much as it could when you first saved it. In essence, you've lost purchasing power, and that's a loss of real value. Now you might be thinking, but the bank pays interest, doesn't it? That's true, but let's talk about that. The average bank interest rate often lags behind the annual inflation rate. So, even though you're technically earning interest, the value of your money is still being eroded by inflation. It's like trying to fill a bucket with a hole in the bottom. The water level might rise a bit, but you're still losing water. This is especially true in economies experiencing high inflation. In such cases, the money saved in a bank account can lose significant value in a relatively short period. So what's the solution? Watch to the end to find out. Inflation is a silent enemy, steadily eating away at your hard-earned savings. In other words, your money is slowly losing value while you're not looking. Banks lure you in with their promise of interest. But have you ever stopped to look at how low these rates actually are? The truth is, the interest you earn on your savings in a bank is often laughably small. In the world of finance, interest rates are like the heartbeat, pulsating with every fluctuation in the economy. But when it comes to your savings, the pulse is more of a faint murmur. Banks often offer rates that are just a smidge above zero. Yes, you heard it right, just above zero. Now compare this with the rate of inflation. Inflation is like a hungry beast, constantly nibbling away at the value of your money. Unfortunately, the meager interest rates offered by banks often fail to keep up with this beast. So you see, your hard-earned savings are not really growing, but merely struggling to hold their ground against inflation. So are you really earning or just barely keeping up? Opportunity cost is a critical factor to consider when deciding whether to save money in a bank. While banks offer a safe and secure haven for funds, the trade-off often lies in the opportunity cost of not pursuing potentially higher yield investments. Financial markets present various investment avenues such as stocks, bonds, and mutual funds, which have historically demonstrated the potential for greater returns compared to the modest interest rates offered by most savings accounts. Saving exclusively in a bank may limit exposure to diverse assets that can weather economic fluctuations and provide higher returns. So if banks aren't the dream destination for your money, where should you direct it? Well, the world is a golden vault of investment opportunities just awaiting your exploration. Let's begin with the thrilling world of stocks. Investing in stocks is like buying a piece of a company. As the company's value ascends, so does your investment's worth. Stocks are a ticket to potentially incredible returns, albeit with a higher risk. The secret to navigating this field? Educate yourself. Comprehend the essence of the company you're investing in and brace yourself for the roller coaster that is the market's highs and lows. Now, on to bonds. When you invest in bonds, you're basically lending your money to an entity, such as a corporation or the government. In return, they promise to repay you with interest at a set date. Bonds are the safe harbor in the stormy sea of investments, and although the returns might be more modest, they are also more predictable. Bonds are a commendable choice if you're scouting for a steady stream. Next, let's delve into the lucrative world of real estate. Securing property can be a veritably rewarding venture. Whether it's a residential, commercial, or rental property, real estate has a tendency to appreciate over time. Plus, if you lease it out, you've got a consistent source of income. Bear in mind, though, real estate will demand significant upfront capital and ongoing management. On top of all this, there's a universe of mutual funds, exchange-traded funds, or even founding your own business. The opportunities are limitless. The critical point here is to diversify your investments. Don't nestle all your eggs in one basket. Distribute your money across various assets to mitigate risk and enhance potential returns. So, you see, there's a wide expanse of prospects out there, each offering potentially greater returns than a conventional savings account. While these alternatives have their own risks and challenges, they also present the potential for impressive rewards. Remember, it's your money. It's your responsibility to make it work for you. Don't let it lie dormant in a bank, barely battling inflation. Rather, let it work, let it flourish, and let it safeguard your financial future. After all, your journey towards financial freedom commences with a single step. Are you ready to embark on this adventure?